Hi guys, welcome back to my channel, Insurance Plus Investment PH. My name is Alec Bala and I am your friendly neighborhood financial advisor. Wow, sounds like something from Spider-Man, your friendly neighborhood Spider-Man, right? Pew, pew. Alright, so joking aside, what we will be discussing right now is what is life insurance? Everybody has seen it, everybody has heard about it, but there are some people who do not exactly know what it is and how it would benefit them. Statistically, they say about 15% know and own life insurance. Here in the Philippines, that's kind of mind-boggling because it's really, really low. Alright, life insurance. Basically an agreement. Insurance company is an agreement to pay a specific amount after the death of an insured party as long as the premiums are paid and up to date. So when we say that specified amount that insurance company will be paying, that is what is called a death benefit. Having these policies gives the family members an assurance, of peace of mind, and financial protection in the untimely demise of their family member who is insured. So life insurance falls into two different categories. You have whole life here, and you have term life. So whole life is a type of permanent life insurance, meaning that it covers your whole life. Granted that you pay all of your premiums and everything is up to date. Okay, so there are some other insurance policies you are able to build cash value. So this is a component of that whole life insurance, that permanent life insurance. So in order to build this cash value, the premiums that you paid, that is taken and that is invested into the market, the stock market. And whatever you make from that, whatever profit is made, that is yours to use however you wish to use it. Term life insurance, on the other hand, all right, it covers you for a set or specific term. Example, you can have an insurance policy which will only be in force for 20 years, or if you want 30 years, and then you also pay a specific amount for it. So you have a set term with a specific amount that you need to pay for it. The thing with term insurance is that it expires. So once it expires, if you want to renew it, you can renew it. However, your premium might be higher, or they will require you, the underwriting department, so these are the people that assess the policies, you would have to get reassessed. You might even have to undergo a medical test, medical assessment, because say your term insurance is for 20 years, anything can happen between those 20 years, hence the reassessment. And that reassessment will determine whether or not you qualify for another insurance policy. Now, between the two, between whole life and term life, usually term life tends to have cheaper premiums. Alright, so you're asking Alec, or you're asking, hey, friendly neighborhood financial advisor, now I know what life insurance is. I have a good idea. So who needs life insurance? Say that you are the breadwinner of the family, you are the primary income earner. It would be recommended to get life insurance. You may need it actually. In the event of your untimely demise, your family won't have to be worried about where to get money, having to worry about borrowing money from friends, relatives, loan sharks. No. But if your family, if you have a policy and they receive that death benefit, then again, they'll be able to have peace of mind. They won't really have to worry about having to find money elsewhere. Why put the financial burden on your family? And especially if you're the breadwinner, it's your responsibility to make sure you secure your family's future, right? So life insurance policies, they also have an investment component. I mentioned this earlier. This investment component, this means that the premiums that you pay will be taken, a portion of it will be taken, and then put into the stock market. Again, this is managed by what are called fund managers. They are experts in what they do. They follow the stock market religiously, and they know when to invest and then when to withdraw the money. So here it's really all about growth. You put it into a bank account. How much are you only really earning? How much interest or how much profit would you gain? 0.0125, 0.02, something like that, right? But if you invest it into stock market, there's a high chance that it could be 3 to 4%, 6 to 7%, 8%, 10%, really depending on your risk assessment profile. Meaning to say, how big of a risk taker are you when it comes to investing your money? Are you investing a large amount, expecting to get a large amount back as your profit? These are also the kinds of things that financial advisors will help you identify, so that if you do purchase a life insurance policy within an investment component, fund managers will know what your risk assessment profile is and will act accordingly to it. And that is how they will know how to work the stock market. Now, the profits that you get from that, or the cash value, that will really be, again, up to you how you want to spend it. Perhaps that extra money you can use on a new business as capital, use it as an emergency fund, education fund for your children for their tuition when they go off to college. Again, it's really up to you how you want to use it. So honestly, anyone can apply. Anyone can apply for life insurance. However, it would really be up to the underwriting department. So these are the people who assess your financial background, the demographics such as your age, gender, the type of work that you have. They assess that, they take all that, they compile it, and then they're the ones who are able to determine if you are qualified to have a life insurance policy. If you have some sort of pre-existing condition, say that you had a heart attack before, or maybe a stroke or something like that, there's a high probability that you might not be approved, but at the same time, it never hurts to apply. Alright, so keep in mind also that life insurance might not cover all aspects, meaning to say, and it would really depend on the type of policy that you purchase. It might not cover accidents, maybe if you have a dismemberment or a loss of limb, if you're burned, if you become totally disabled and cannot move anymore. So depending again on the policy, if it's not built into that policy, then that means you would have to purchase what are called riders. These riders here are add-ons, so you can add them on to the policy at an additional price. This is on top of the policy premium that you would be paying. So it's really important that you have a financial advisor, someone that could help guide you, and figure out what it is that you need for yourself and how it would benefit you and your family. So what we covered today, again, what is life insurance and who can have or who can get life insurance. Honestly, it's really up to you. It's your choice if you want to get it or not. No one is forcing you to get it. For me personally, my job is to advocate and spread financial literacy, helping those who are interested in knowing more about what the benefits of having life insurance would be for them and their family. Then from there, we give them options. And again, it's your choice if you want to purchase the policy and protect you and protect your family in case something does happen. Too many times there are families who have a breadwinner. So you have a family of 4, and the breadwinner, the primary income maker, suddenly passes away unexpectedly. That's the worst thing that could happen, because you are not expecting it at all. It leaves the family figuring out where to get money. This is an example. If there is no life insurance, if no life insurance was purchased at all. So now your family is scrambling, emotional and sad and upset because they don't have the funds, they don't have the means, especially during this pandemic, to pay for your hospital bills, doctor's fees, the medicines that you consumed, and then after that, figuring out where you're going to be buried. You have to pay for the lot if you didn't purchase the lot of where you're gonna be buried. Funeral costs, transportation, and what about the money that your family needs in order to maintain their current lifestyle while the breadwinner was still alive? So there are a lot of factors to take into consideration. It definitely is a big decision to make, but if you are saving putting aside a portion of that money to go into, let's say, monthly premium, or if you can do it, you can do it quarterly, semi-yearly, or yearly, paying it. These are the types of things that we could prepare for, because anytime, anything could happen to us. So why not take that precaution? And if nothing happens, hey, that's good. But if something did happen, you have something there to fall back on. You won't be so worried about what if something happens to me, what will happen to my family. So again, my name is Alec Bala, your friendly neighborhood financial advisor. Should I keep that? Yeah, I think I like that. So thank you again for tuning in. Hope to see you in the next video. So if you like everything that you've heard, please stay connected. Like, comment, subscribe, and click the notification bell. Stay up to date with all of my videos, so on and so forth. So until the next one, see you later and stay safe as always. Bye!